All right, we are going to go ahead and get started. Wow, almost 800 people have joined on. This is amazing to see, and we hope we can make this a valuable time of your day, and we appreciate you taking time out of your day to come and join us. We've got a really special lineup featured for you all here today, and couldn't be more fitting because there have been some major announcements, as I'm sure some of you have been hearing about in the news around student debt. And so we want to make sure that we take the time to not only share those with you, but help explain how you would be impacted as a borrower, and then make sure you are fully set up to take advantage of all of these services and resources that Savi users have at their disposal. So before I begin, just a few housekeeping notes. Again, I will introduce myself. For those of you who have attended Savi webinars in the past, my voice might sound familiar, for better or for worse. My name is Lindsay Clark. I'm Chief Borrower Advocate and Director of External Affairs here at Savi, and I lead all of our consumer education sessions and workshops. And I'm really excited to be joined here today by such a special group of people. This is really the team of student loan experts, the internal team at Savi, part of that team, I should say, that support our borrowers day in and day out and are truly experts in the field of student debt. And so they are joining our webinar today as panelists, Ryan Andreas, Katie Kashmir, Joe McDermott, and Laura Tapia. These are the experts who are going to be assisting me, but really assisting you and fielding as many questions as possible in our Q&A. So that being said, to the housekeeping, we want this to feel as interactive and to be as valuable as possible. That's always our primary goal when it comes to Savi webinars. And so that being said, if you do have questions throughout the presentation, we encourage you to direct those to the Q&A. All right, so I believe the chat is turned off, just the Q&A function. And our team of experts will be standing by and doing their best to field as many as they can. We can't make promises that we'll get to everyone's questions, but I wanted to make a particular note. If you are a premium essential user, you're an essential member, you've upgraded to that essential plan, when you do ask a question, if you could put your email address that you have your Savi account registered under with that question, that will allow our team to be able to look up any relevant information sort of related to your account and be able to provide sort of an even more personalized level of service and attention to detail when it comes to answering your question. So again, that's for essential members. Please feel free to include your email address. That way, our team will be able to provide even better support for you in real time. All right, and this session is being recorded, and everyone will be receiving a copy of this recording within 24 hours. That's when this gets sent out. So if you have to hop off early at any point, or you sort of get distracted or lose track, not to worry, it happens to everyone. But like I said, everyone's going to be getting a recording, and this will be shared with you about the same time tomorrow. All right, with that being said, we have a lot to cover, and so I really want to dive right in to the good stuff here. So just a quick look at the agenda we're going to cover here today. So first and foremost, I'm just going to briefly introduce or reintroduce, for those of you who are familiar with us here at Savi, who we are and what we do. I think it's important because there are a lot of less than reputable actors in this space, a lot of scams out there. So it's important that we make sure you understand who we are and why we are trusted by communities of borrowers across the country. And then we are going to dive right in headfirst on the policy updates, most predominantly the announcement that came from the Biden White House just 2 weeks ago. We're going to talk about what was included and what that means for all of you as borrowers. Then we're going to talk about some of the additional pandemic relief, some of which has been around for the last 2.5 years, but how that has been updated recently and what the next couple of months will look like for you. And then we are going to do a bit of a deeper dive on public service loan forgiveness. there is a limited time opportunity right now going on with this program, and most of Savi users are eligible in some capacity for forgiveness. And so we want to really take some time to help you understand the implications of these changes and the need to take action for many of you before the October 31st deadline. So we'll go into more detail then. And then the latter half of the presentation, if we eventually get to it, is going to focus on helping you understand how to best utilize your Savi account. We're going to show you some of the features, screens to help you onboard, how to go through that process, and what that technology will offer you, especially as we head into this fall, with lots of these announcements and updates constantly coming about. We are updating that tool. We want to make sure everyone is aware of the latest that Savi has to offer. Now, just as a forewarning, I expect, because we have so much to cover here today, and because I tend to talk a lot, that we may go over time. Again, this session is being recorded, so if you have to hop off at the end of the hour, obviously no worries, and there's no expectation to stay on. Beyond that, you will receive the full recording afterwards. But for those of you who are able to and wish to, I will likely be going past that hour in my explanations, and will stick around as long as I need to make sure we get as many of these questions answered. So we really want to make sure we use this time, as best as we can. But as many of you who have attended my webinars before know, I have a tough time ending things. So like I said, I'll stay around as long as I can to make sure that everyone gets their questions answered. Okay, with that being said, just very briefly, for those of you who might be new to Savi, and for those I know who are returning users, and who might have actually even been on a webinar earlier today, a little shout out to all of you. So Savi is a social impact technology startup based in Washington, D.C. We were founded by policy experts and advocates who had been fighting on behalf of the borrower for almost a decade. And in 2017, this was the first year that borrowers could start applying for public service loan forgiveness, this big forgiveness program. And over 100,000 borrowers applied, and less than 1% were accepted. And our founders saw this and decided to do something about it. So they created Savi as a technology platform and a service to help borrowers like you and like me. I have a little over $200,000 in student loan debt between undergrad and grad school. So if that makes any of you feel better about your own situations, then mission accomplished right off the bat. But I digress. So they created Savi to help borrowers like us not only better understand their debt, but navigate from start to finish around these complicated and overwhelming programs that were notoriously difficult for borrowers to achieve success. So, obviously we really focus on helping borrowers become eligible and cross the finish line on forgiveness around programs like public service loan forgiveness. But we help to sort of optimize their situation along the way by minimizing their monthly payment through things like income-driven repayment plans, so that we can maximize that forgiveness. That's really the goal when we talk about optimizing your situation. We're a registered public benefit corporation, which means it exists in our mission and charter to serve the public benefit. And that's exactly why we do things like this here today. We host educational workshops and webinars almost on a daily basis. This is actually the third one we'll be hosting just today for various communities of borrowers across the country. And the reason being is because we firmly believe that when borrowers are better educated and informed about their debt, they are truly more empowered as consumers. And that's exactly what I hope to have you all walk away with today. All right, so with that behind us, we're going to dive right into the big announcement. So hopefully most of you, if you have been following the news closely at all, or not even so closely, because it was certainly the talk of the country last week, or 2 weeks ago, I should say, that the Biden administration announced wide-scale cancellation. And I'm going to sort of go through what this sort of means and this plan here in a second. But I want to sort of emphasize the fact that this announcement was part of a 3-point student debt plan. And so I'm going to sort of take the time to walk you through each of these points here now. But just to say that while sort of the announcement around 10,000 to 20,000 in cancellation was obviously sort of the headline, I really want to make sure that borrowers understand, especially this third point here, number 3, how impactful this is going to be for borrowers moving forward beyond this cancellation. And we're really excited about how this is going to hopefully help so many people. So first and foremost, okay, the payment pause extension. So the first point of this announcement that came from the Biden administration was a final extension of the student loan payment pause, okay, until December 31st, 2022. So let's back up a second to give some context here. So the payment pause and interest pause went into effect back in March of 2020 when the CARES Act went into effect. So right at the height of the pandemic. All right. When the CARES Act went into effect, payments were paused and interest was waived. So payments $0, interest 0% on the majority of federal student loans out there. Okay. Qualifying loan types needed to be what's called federally held loans, meaning they are owned by the Department of Education. All right. Now, this was implemented automatically on student loan borrower accounts, meaning if you had an eligible loan type, your loans were automatically put onto pause, your interest was automatically put to 0%. Okay. Now, this payment and interest pause has since been extended 7 times. Okay. Most recently, just 2 weeks ago, with Biden's announcement, it was extended for this final time through December 31st of this year. Meaning, as of right now, payments are scheduled to resume for the majority of federal student loan borrowers in January of 2023, next year. They've really taken sort of, an important line here around this being the final extension, okay? Again, because it has been extended 7 times at this point. All right, so with that in mind, again, as of right now, the payment pause will continue through December 31st, 2022, and payments are expected to resume for most of us in January of next year, all right? So that was the first part of this student debt plan. The second part is probably the one that most of you are familiar with, but that drew most of the headlines. And that was around providing targeted debt relief to low and middle income families in the form of cancellation. So that cancellation is as follows. If you have federal loans, okay, federally held loans, you are eligible for $10,000 in direct loan cancellation if you meet certain income thresholds. So if you are a single borrower, that threshold is $125,000 income per year. If you are a head of household or married, that income threshold is $250,000 per year. Okay. So if you fall beneath those thresholds, all right, you are eligible to receive $10,000 in the form of cancellation. Now, if you happen to have had a Pell Grant, you are eligible to receive up to $20,000, okay, in cancellation. Again, dependent upon those same income thresholds, all right? So if you have questions about these, as I'm talking through this, our support team is standing by ready and addressing those in the Q&A, as I see many of you are adding questions as we speak. But want to make sure that that is clear. So again, Pell Grant recipients are eligible for up to $20,000. Again, depending upon those income thresholds. For single borrowers, it's $125,000 a year income. For a head of household and or married, it is $250,000 a year in income. Okay, and for anyone else with general federally held loans, okay, the cancellation is in the amount of $10,000, and again, under the same income thresholds. Now, here's what we know as of right now. Because the cancellation, okay, requires an income threshold, it therefore will require an application, and that application has not yet been made available. according to the Department of Education, they plan it to be made available in early October, okay? And once that application is submitted by a borrower, they also say that it will take about 4 to 6 weeks to process, all right? Meaning they are encouraging all borrowers to take steps to submit this application before November 15th of this year if they want to have this cancellation processed and removed from their loan balance before payments are expected to resume, okay? So with that being said, and one of the things I hope you all have relied on Savi for over the last 2.5 years, in which we've seen a lot of student loan updates, is that as soon as that application becomes available or we learn more information about what will be entailed, we will communicate that to you in your inbox. And of course, we'll be there to help you navigate each step of the way. So again, you can be assured that when it comes to any important updates and information around these items that you see here and more, that we will communicate that with all of our Savi users and borrowers. And like I said, provide you with the ability to understand how that impacts you personally and the support to be able to take any action needed. Okay, last but not least, the third point of this sort of student debt plan, and the one I'm personally most excited about, is this idea to make the student loan system more manageable for current and future borrowers. And the way that they plan to do this is by introducing a new income-driven repayment plan. Now, this new income-driven repayment plan, instead of capping monthly payments at anywhere between 10 to 20% of a borrower's discretionary income, really meaning their adjusted gross income or AGI, this plan is going to cap it at 5%. So that will mean that monthly payments are going to drop significantly under this plan. It also will mean that under this new plan, they are going to provide loan forgiveness for borrowers after 10 years of payments instead of the normal 20 years of payments with balances under a certain amount. So the goal here being to have borrowers pay less and to not be stuck with this debt for decades at a time. They're trying to help borrowers achieve freedom earlier and to make the process towards that freedom a lot less burdensome. There were also some additional stipulations that were included here, mainly around interest. And I know that this is something that many of you on the webinar here today can attest to personally, and I certainly can. I've been paying off my loan since 2011, and my balance has only increased, not decreased. And so that's probably one of the most frustrating things about having student debt that people without student debt don't realize is just how crippling this capitalized interest can be, to the point where, again, you could be paying consistently on your loans for decades, and your balance, it's not that it just stays the same, it actually increases. And so what this new income-driven repayment plan will provide for is a limit to that interest, meaning a borrower, even if they are paying $0 a month on this income-driven repayment plan, will not accumulate interest so that their balance will not grow while they are on this plan. And that is truly life-changing for borrowers who, again, who I think can relate to the situation I described myself, but where that interest truly ballooned that balance out of control. So again, there's more information that we expect to be released about this new income-driven repayment plan, how it will be implemented, when it will be implemented. All of that is still yet unknown. And again, we will communicate that with you all as soon as it becomes available. And of course, you will be able to utilize Savi to enroll in this plan once it does. Okay, I'm going to take a quick pause here before I transition and talk a little bit more about some of this pandemic relief and some of the other things that have been going on. And I'm actually going to turn it to my colleague, Job, to see if there are any questions that might have been coming through that might be helpful to answer out loud. Job, anything coming to mind?
Hi, Lindsay.
Hey.
People asking if time during the payment pause will count, and just lots of people interested in the new cancellation announcement.
Absolutely. So I'm actually just about to touch on this as far as time during the payment pause. I will talk about that in just a minute. But like I said, as far as this cancellation announcement, they've basically announced the amounts, right, and the sort of income thresholds. But as I mentioned, an application is going to be required, which has not yet been released. And sort of the contents and or the process around that application is still yet unknown, but it will likely require supporting documentation attesting to your income. So, in the form of your tax return from this year or the year previous. Again, all of those details we expect to sort of be formalized in the coming weeks. And according to the Department of Education, this application will become available online in the beginning of October. So for right now, the only things that you really can do, I know, again, by having a Savi account, you are going to be, updated and alerted as soon as there is action to be taken on your part and things become available. You can also sign up at studentaid.gov to receive an alert directly from federal student aid when that becomes available as well. And we will keep you posted. All right, we're going to keep charging ahead here because we've got a lot to cover. And so I just want to talk about a few other things that have been happening in the student debt landscape, somewhat related to the pandemic relief, but sort of the challenges and opportunities that are presenting themselves for borrowers, in addition to the things that were announced a couple weeks ago. So as I mentioned, I sort of reviewed the payment pause extension. But I just wanted to emphasize the fact that basically after nearly 3 years of not having to make payments, borrowers are going to finally be scheduled to resume their payment schedule starting in January. So, I don't know about you all, but for me personally, it's been great not having to make student loan payments. My student debt has been out of sight, out of mind, which is never a bad thing given how much there is. But obviously that's going to be a challenge for many of us to reincorporate that monthly payment back into our budgets and things like that. And I think especially with the introduction of this new income-driven repayment plan, we want to make sure that everyone is aware of that sort of looming date, and that you take the steps in the coming months necessary to make sure you are set up on sort of the best repayment plan possible, so that there are no sort of unexpected surprises, or that you are going to be able to transition back into repayment as comfortably as possible. So we will be here to help make sure that that happens for all of you. Transitioning on, I wanted to talk about, and this was the question that Joe brought up from some of our borrowers here, is a huge opportunity that this payment pause period has provided to borrowers who are working in a public service capacity or are pursuing the public service loan forgiveness program. So for anyone who has been working for a qualifying public service employer during this payment pause period, so from March of 2020 through the end of this year and beyond, but for anyone who has been working for that qualifying employer, okay, for each month that payments have been paused from March of 2020 through what will be December 31st of 2022, that is 34 months in total, okay, those borrowers are eligible to essentially receive 34 free PSLF qualifying payment credits towards the 120 total needed to achieve full forgiveness on the remainder of their loan balance under the Public Service Loan Forgiveness Program. So as I mentioned before, we're going to talk about the PSLF program in more detail in just a second here. But all this to say that normally under the program, you need to have made a payment in order to receive a qualifying payment credit, and you need to receive 120 of those to get forgiveness. Well, basically, because of this payment pause, each month that payments have been paused, the Department of Education is giving you a free PSLF credit as if you did make a payment that month. Therefore, without having to pay a dime the last 3 years, you are getting 34 credits closer out of the 120 total needed to full forgiveness. So that's basically like 3 years out of the 10 years total. That is a significant chunk of that time in which, without having to pay a thing, you are getting closer to forgiveness. And I wanted to emphasize this because from my interactions with borrowers, at least over the last year, I found that many people are either misinformed or unaware of this. And in fact, many borrowers actually opted to voluntarily continue making payments during this payment pause because they thought they needed to in order to qualify for the program, when in fact they did not. So I want to make sure that everyone is aware of this, because for anyone who might not have been and was voluntarily or has been voluntarily making payments, you can actually have any voluntary payment made during this payment pause refunded to you. In fact, just last week, I was working with a borrower in which she had been making voluntary payments thinking that she needed to in order to receive PSLF credits. She found out otherwise thanks to our webinar, and we just had $18,000 refunded to her voluntary payments she had made during this time that she absolutely didn't need to. She's getting those PSLF credits. She should keep that money. It's ultimately going to be forgiven off her loans. So this is a process our dear support team can assist you with. It's sort of dealt directly with your servicer. If you have additional questions, you can ask our folks in the Q&A, but something that I want to make sure borrowers are aware of and take advantage of if eligible. Okay, moving on. Want to talk a bit about some of the federal servicer transitions that have been happening over the last year and a half. So I'll take a step back here to give some context on federal servicers and the role they play for you as a borrower. So federal servicers are companies like Navient, Nelnet, Great Lakes, Mohila, FedLoan. There are about 9 to 10 total federal servicers out there. These are companies that are contracted by the Department of Education in the repayment and management of your student loan. Okay, so this is the account that you log into to set up your auto pay and where you can see your monthly payment and manage things like that. Now, just to clarify, Savi is not a servicer. So you would never start making payments to Savi or through Savi. You can kind of think of us more like a facilitator or an intermediary or an advocate on your behalf. So we might do things like submit an application on your behalf, or we might get on the phone with you and your servicer to resolve an issue. But we're never going to replace that relationship or that role that the servicer plays. So you are always going to maintain that relationship with your servicer. Savi is simply here to make that experience a lot better and to make sure that you achieve the best outcome possible. All right. Now, with that being said, last year, 3 of the biggest federal servicers out there, Navient, Granite State, and FedLoan, announced that they were not renewing their federal contracts, basically meaning they would stop servicing federal student loans. So as a result, what that meant for the 16 million or so student loan borrowers who were collectively serviced by those entities, they would need to be transitioned to other servicers. So if you had Navient, you are moving to Advantage. Okay. If you had Granite State, you're being transitioned to Ed Financial. And if you had FedLoan, you're being transitioned to Mohila. Now, these transitions happen automatically in that if you are a borrower who is impacted, you will receive a communication from your current servicer alerting you to the fact that your loans are going to be transferred. And then you will receive a communication prompting you to create your new online account when your new online servicer is ready for you to. Okay, so it's very, very important, all right, that you make sure that your contact information is as updated as possible with your servicer. That way, when and if they need to communicate with you about this and these changes, that you are able to receive those, okay? And that you are sort of keeping an eye on your inbox if you think that you would be an impacted borrower. Now, the Department of Education can only transition a certain number of loans and borrowers each month. So, we have 16 million total borrowers that need to move. And so this process began at the end of last year and is likely going to take through the end of this year, possibly even into early next. So if you, are sitting here and thinking, well, I have a Fed loan, but I haven't yet moved to MOHELA, that's okay. That will likely happen in the coming weeks and months. So again, you're going to want to keep an eye out on your inbox because you should receive a communication for when it's time to create your new account with MOHELA. All right. Okay, so I want to make sure everyone is aware of that. Last but not least, and this is what we're going to spend the majority of the next little bit of the presentation talking through, is something called the Public Service Loan Forgiveness, or PSLF limited waiver. Okay. And essentially, this was announced last October 2021. The Department of Education came out with a sort of overhaul of this public service loan forgiveness program, an attempt to retroactively right a lot of the wrongs that had been caused by the sort of severe technicalities and strict eligibility requirements around this program that unfortunately had prevented the majority of people from achieving success. And so again, I'm going to talk about that in a little bit more detail, but sort of wanted to preview here that that everyone on this call should be aware of is this waiver deadline of October 31st, 2022. Okay, so that's coming right around the corner and is going to basically be in the same month that we've got this cancellation application coming out as well. So there's going to be a lot to do if you haven't done so already around this waiver in October. Essentially, this waiver, it's not representative of a thing or a physical application, but more so this period of time between last October 2021, when it was announced, and this coming October 31st, 2022, the deadline, during which eligible borrowers are able to retroactively take advantage of expanded eligibility requirements around the program to effectively maximize their PSLF benefit. Okay, so borrowers who previously were rejected or denied, whose payments were not counted, are now seeing those payments count. And as a result, you have borrowers who are now not only eligible for full and immediate forgiveness, but if not, they are a heck of a lot closer towards full and immediate forgiveness. And this is something that for those who are eligible, everyone needs to take action before October 31st in order to be able to benefit from this waiver. So like I said, we're going to go through that in more detail because I know the majority of Savi users are eligible for public service loan forgiveness. And this is such a once in a lifetime opportunity that will expire after October 31st. We want to make sure that we dedicate the time to explaining that fully. Okay, I'm going to take another quick pause, throw it back to Job. Job, anything that came through in the Q&A that I can answer out loud before we move on?
Nothing new so far. I will keep an eye and hopefully at the next break we'll get some new ones, but it seems like everything's popping up you're covering.
Awesome. I love when that happens. All right, great. So we will keep chugging along and maybe we won't be so behind on time as I thought we would be. Okay, so I really want to spend the next 10 minutes or so going through the Public Service Loan Forgiveness Program, basically in an attempt to sort of explain the original structure and rules of this program, what that resulted in and how it kept borrowers from achieving forgiveness, and then exactly how this limited waiver that was introduced last year has changed those sort of rules and structure for this limited period of time, and how that is going to impact you as an eligible borrower, all right, and what that will mean and what you need to do in order to take advantage of this. Because this program was complicated enough to begin with, but when you try to sort of add on this layer of this limited waiver, I find that many borrowers become even more complicated. So I'm going to try to explain this as best I can. But when you see here on your screen, public service loan forgiveness before, what I mean by that is before this limited waiver went into effect. So basically the original program. So public service loan forgiveness, or PSLF, okay, you'll hear me refer to it as PSLF likely from here on forward, okay? So PSLF is essentially full forgiveness on the remainder of your loan balance, whatever that may be. It could be $5,000, it could be $500,000, all right? Tax-free, okay? There are absolutely no tax implications with this forgiveness program, okay? After you have made 120 qualifying payments. Now, if you could see me on video right now, you'd see that I'm doing qualifying payments in air quotes, because the devil is really in the details as to what constitutes a qualifying payment. And it really comes down to these three things that you see on your screen right here, okay? These three categories. I'm going to walk you through those in a second. But before I do, I want to clear up some common misconceptions about these 120 qualifying payments. First of all right, they do not need to be consecutive. They just need to be cumulative. You just need to reach 120 total qualifying payments in order to achieve forgiveness. So for example, let's say you work for 2 years as a public school teacher and accumulate 24 qualifying payment credits. And then you leave and go and work in the private sector. Nothing happens to those 24 credits. They simply pause. And if you were to ever resume your eligibility and start working again for a qualifying employer, you could resume accumulating those credits towards the 120. Okay. So again, they do not need to be consecutive. They just need to be a total cumulative 120, right? However, okay, the maximum amount of qualifying payment credits that you can get, okay, per 1 month is 1. So it's 1 month, 1 payment, 1 credit, okay? Meaning in any given calendar year of 12 months, the maximum amount of qualifying payment credits you can receive is 12, okay? So if you have to get to 120, right? And you can only get 12 a year, you guys can do the math here, right? That's 10 years. That is the earliest, 10 years is the earliest you could achieve forgiveness under this program. You cannot achieve forgiveness any sooner than 10 years. And that would be if you were making them consecutively, right? Which you don't need to. You just need to get to 120 total. So while many people think of this as a 10-year program, it can oftentimes take borrowers longer, right? Again, because it does not need to be consecutive. They just need to reach that total 120. So I like to think of it more in terms of these 120 qualifying payments because it really has more to do with the payment versus the time period, okay? So it's just to keep your perspective in the right sort of frame of mind here. Now, what constitutes a qualifying payment? Well, it comes down to these three things that you need to satisfy simultaneously. So number one, qualifying employer. You need to work for a qualifying employer, which is any government organization at any level, federal, state, local, or tribal, or any non-for-profit 501c3. The only stipulation here is that you must work a minimum of 30 hours or more a week. Now, let's say you work part-time at a qualifying nonprofit hospital and part-time at another qualifying nonprofit hospital. So long as both employers or multiple employers are all qualifying employers, okay? And so long as combined, you are working a minimum of 30 hours or more a week, you can use multiple employment, okay, multiple part-time employment to qualify for this program. So you don't just need to work full-time at one employer to qualify. You can combine part-time employment, again, so long as all of the employers are qualifying and you're working 30 or more hours combined a week. So that's number one, that's qualifying employment, okay? That's usually the easiest for most borrowers to be able to establish on their own. Now, important to note here, this program started October 1, 2007, okay? Meaning the eligible time frame for any qualifying employment here is October 1, 2007 to present day, all right? Let's say you've been working in public service for a qualifying employer since 1995, okay? Unfortunately, everything from 1995 up until October 1, 2007 is basically irrelevant for the purposes of this program and does not count towards any of these qualifying payment credits. This sort of the time clock begins October 1, 2007 to present day, okay? which is why the first year that borrowers were eligible to actually apply for this forgiveness, all right, was 10 years later, October of 2017. Okay. All right. So just want to make sure everyone is aware of sort of that eligible time frame. All right. So we talked about qualifying employment. Now, not only do you have to be working for a qualifying employer, but while you're working for that qualifying employer, you have to have a qualifying loan type. And under the original rules of the program, the only loan type that qualified was a direct federal loan. Now, the direct federal loan program began in 2010. So if you have a loan from 2010 to present day, there is a very good chance that it is a direct loan. The easiest way to tell if it's a direct loan is it will literally say the word direct or DL, which stands for direct loan, in that loan title. Okay. Now, if you perhaps had a loan before 2010, right, there's a very good chance it could have been what's called a FFEL loan, FFEL, which stands for Federal Family Education Loan. This was simply the loan program in existence prior to direct loans. All right. Now, if you had one of these older loan types, okay, you would need to consolidate that loan into a direct loan in order to make it eligible for the Public Service Loan Forgiveness Program. So under the original rules of the program, the loan type, a FFEL loan, was not eligible as is. It needed to be consolidated into a direct loan. And then from that point forward, you could start accumulating qualifying payment credits towards the 120 needed to achieve full forgiveness. Now, let me tell you how this worked. This played out in real life for so many borrowers starting in 2017. They had been working for a decade or more in public service, thinking that they were going to be eligible for this program, and went to apply. And when they did, they were rejected because they had this FFEL loan. And they were basically told that they needed to consolidate and essentially start over at zero and work another 10 years and make another 120 payments in order to be eligible for forgiveness under this program. To say that this was frustrating would be the understatement of the century. This was maddening for borrowers who had basically been for 10 years under the assumption that they were going to be eligible to have their loans forgiven under this program as a result. And so, I've been giving workshops around this program since 2017. And it was, unfortunately, the worst part of my job early on, because most of the time it involved delivering bad news to borrowers, people who I was telling for the first time that because of their loan type, that they were basically going to have to start over, and that none of their prior years of public service or payment were going to be able to count because of something as seemingly minute as this loan type, which they never had any idea was sort of important to begin with, or they were given the wrong information from their servicer. All right. So I will talk about how this waiver in a minute or two addresses that in an attempt to sort of rectify some of the wrongs of the program early on, and how that has benefited those borrowers and others in a second. Before I do, I wanted to just quickly take a second to address Parent Plus loans. So I'm just curious, maybe by a show of hands on the webinar here, how many of you out there have Parent Plus loans? All right. So good, a good portion of you. And this is indicative of sort of the current state of affairs in the student debt landscape. Many people think the student debt crisis is a young person's problem, a millennial issue, when in fact the fastest growing demographic of student loan borrowers is actually 50 plus, but it's mostly parents taking out loans for their kids. And that's exactly what a Parent Plus loan is. It's a loan taken out by a parent on behalf of a child, but in the parent's name. Now, the reason I bring this up because I want to address Parent Plus loans as they relate to public service loan forgiveness. So Parent Plus loans, can become eligible for public service loan forgiveness. However, they must be consolidated in order to do so. So you must consolidate that Parent Plus loan, and your eligibility would be based on the parent's employment, right? The loan is in the parent's name. So the parent must work in public service, But again, without consolidating, you will not be able to accumulate qualifying payment credits. So if you have not consolidated yet on that loan, you are going to want to do so as soon as possible. Okay. And then from that point forward, you can start accumulating qualifying payment credits. All right. So we've talked about qualifying employment, qualifying loan type, direct loans. If you don't have a direct loan, you've got to consolidate it to a direct loan in order for it to be eligible. And from that point forward, you can start accumulating qualifying payment credits. Again, this was under the original rules of the program. And last but not least, so while working for a qualifying employer and having a direct loan, you need to be repaying that loan on a qualifying repayment plan. Okay. And under the original rules of the program, the only repayment plan that qualified were income-driven repayment plans. There are about 4 different types currently of income-driven repayment plans. Doesn't matter which one you were on, you just had to be on one of them, all right? And you had to make that payment on time and for the full monthly amount, right? So you needed to satisfy all 3 of these things: your employment, your loan type, and your repayment plan simultaneously in order to achieve a qualifying payment credit. And you needed to achieve 120 total of these before being eligible for full forgiveness on your loan balance. So let's say you were working for a qualifying employer, you had direct loans, but you weren't making payments. That wouldn't count. Let's say you had direct loans, were on an income-driven repayment plan, but weren't working for a qualifying employer. That wouldn't count, okay? All right, so you need all 3 simultaneously. And again, the eligible time frame here is October 1, 2007 to present day. Now, what did this result in? As I mentioned, because the program started October 1, 2007, 10 years later, October 2017, right, was sort of the earliest that borrowers would become eligible for forgiveness, okay? And basically, as I mentioned before, over 100,000 borrowers applied and less than 1% were accepted. And that was true of that first wave, and it continued to be true in sort of the years following. I would say basically from October of 2017 all the way up until September of last year, okay? The acceptance rates of this program remained under, I would say 2% would be generous, but remained under 1%. And the reason being these technicalities that you see here. Many borrowers were in the wrong repayment plan and had no idea. They had the wrong loan type and needed to consolidate and had no idea, and spent years and years and years thinking they were going to be eligible when in fact none of those years were going to count. They had their employment certifications wrongly denied. There were lost payments or credits that should have been awarded that weren't. It was, quite frankly, a disaster, okay? And so there was a lot of voiced concern from members of the advocacy community, some of our very own partners here at Savi, who had been pushing and pushing for the past couple of years to try and change this program and improve things, because truly the promise of the program was simple. If you are a public servant and work for 10 years in a public service capacity, you can have your loans forgiven. But unfortunately, these technicalities prevented that promise from being delivered. And so finally, in October of last year, after sort of, like I said, a lot of concerted and amazing work and push from a lot of strong advocates around this, the Department of Education announced what they are calling the PSLF limited waiver, okay, which is an essentially limited time opportunity for borrowers to take advantage of expanded eligibility requirements around the program. So they've removed some of these technicalities, but only for a limited period of time, right? And so what that means is that for anyone who wants to basically take advantage and have their situation reviewed under these sort of expanded eligibility requirements, it doesn't mean that they need to have reached 120 before this deadline, but simply that they need to have taken action to essentially apply for the program so that they can have their loans and situation reviewed before October 31st. Otherwise, if they don't take that action, they will miss out and will not be eligible under this limited time opportunity and that sort of expanded eligibility. So what exactly does this expanded eligibility look like? Well, that's what when we see public service loan forgiveness after, what I mean is after this limited waiver has been announced. And again, it's a limited time opportunity here that closes October 31st. So I'm going to sort of describe sort of the changes and impacts here along the same three categories of employment, loan type, and repayment plan to make it easier to sort of conceptualize. So when it comes to qualifying employment, not much has changed here. Still have to work for the same organizations, still minimum of 30 hours a week. The only thing that they have changed or have added here is that you no longer need to actually be employed or working at the time you are applying for forgiveness. So under the original rules of the program, when you had reached your 120 qualifying payments, you actually had to remain employed at a qualifying employer, basically up to the moment you reached that point. And when you applied, up through basically when you applied and received forgiveness on your debt. Now, for anyone familiar with the sort of the processing time and delays involved with this program, that could take anywhere from 3 to 6 to 9 months or more. So you often had borrowers who were planning on retiring as soon as they had reached this, this point, but were unable to because they were still waiting on their forgiveness to sort of process a forgiveness that never ended up coming. So they've changed this, and now you no longer need to be currently employed at a qualifying employer in order to achieve forgiveness, in order to apply. Just keep in mind here, right? If you are no longer working and you are applying for that forgiveness, you would have already had to have reached that 120, right? Working for a qualifying employer beforehand, sometime between October 1, 2007 and when you stopped working. All right, so that's employment. Let's talk loan type. So again, under the original rules of the program, only direct loans qualified. If you had other loan types, you had to consolidate. And basically, you could only accumulate qualifying payment credits from the point of consolidation forward, right? When the loan was a direct loan. Now, under this limited waiver, okay, for FEL loans, all right, that older loan type, you are able to receive retroactive credit for payments made prior to the consolidation when that loan was still a FEL loan. So if you have a FEL loan, you still need to consolidate that loan into a direct loan. Okay, this is one of the remaining technicalities of the program. However, now you don't have to start back at zero. You're able to get credit for the payments and employment but prior to that consolidation. That's all going to count. Okay. So this has been hugely beneficial and impactful for so many borrowers who, because of this older loan type, were basically told they had to start over. So we have so many borrowers who thought that they were 8 or 9 years away from having their loans forgiven, if at all, to basically had full immediate forgiveness of their loan balance within the last few months. Now, for Parent Plus loans, just want to make sure I highlight this specifically. Unfortunately, Parent Plus loans were not included in this PSLF limited waiver, okay? This waiver only extended to what they call loans given to students, which does not include Parent Plus loans. So because of that, Parent Plus loans, again, can become eligible for public service loan forgiveness through consolidation, right? However, unlike the FEL loans now that basically can get credit for payments made prior to that consolidation, with Parent Plus loans, they are not able to. So when you consolidate, you are only able to start accumulating qualifying payment credits from the point of consolidation forward. There's no sort of retroactive credit before that consolidation. All right. I know it doesn't seem fair, and we're working, with a lot of our advocacy partners to try and push for more inclusion of Parent Plus loans, especially around this waiver and in the future around this program. And so, we hope to see some more progress and changes there. But unfortunately, that's how the rules stipulate things right now. All right, so that's qualifying loan type. And number 3, qualifying repayment plan. So remember, originally you had to be on an income-driven repayment plan, make that payment on time for the full monthly amount. Now they are going to give you qualifying payment credit for a payment made on any type of repayment plan. Does not matter. Income-driven repayment, standard, extended, graduated, you name it, any type of repayment plan, doesn't matter. And on top of that, that payment doesn't even need to have been for the on-time or full monthly amount. It can be within 15 days of that due date, okay? or within 50% of that total monthly payment due. They're really being lenient about what they're basically counting as a qualifying monthly payment here. All right. So I know this is a lot, so I'm going to try to condense it and sort of summarize this as simply as I can, or the way that I would think about this as a borrower myself. So always have to keep in mind the time frame we're working with, October 1, 2007 to present day. Okay. You want to think about that and think about any employment, qualifying employment that you might have had during that period of time, during which you were making payments on your student loans. Okay. That's basically what you can sort of simplify this down to. When you're working for a qualifying employer while also making payments on your student loans. All right. And basically, more or less, you are able, unless you have a Parent Plus loan and have not consolidated, you are able to estimate, in your own head, for every payment month that you made, you will be able to count that as a qualifying payment credit. So you can sort of figure out, or just, sort of do a rough estimate on your own of what years you might have been working and making payments, and how close or how much closer you might be towards that 120 than you might have initially thought. Now, I'm going to sort of walk through what the progress and impact to date around this limited waiver has been, because it's been tremendous. But I'm going to sort of finish this slide, and I know we are coming right up on the hour, with sort of the most important thing that I think I can impart on all of you, which is the sort of one call to action that any borrower wishing to take advantage of this needs to take. So give me 2 minutes and I will get there and make sure that you all have that information. So just to sort of summarize what this waiver has done so far. So for 175,000 borrowers, okay, it has meant they went from not being eligible for forgiveness to being eligible for immediate and full forgiveness of their loan balance. Basically, as a result of this expanded eligibility, it brought them to the 120 or beyond it. And so they've received $10 billion in forgiveness alone since October 2021. Now, keep that number in mind, 175,000, right? Compare that to just 16,000 people total who were successful in achieving forgiveness under the program from October 2017, right? So the first sort of date that borrowers could become eligible, through basically right before the waiver was announced, September of last year. Just 16,000 people during all those years, okay? And then there are about 500,000 borrowers who were already in progress towards PSLF, meaning they were somewhere along the way towards that 120, whether they had 20 credits or 80 or 100, right? Somewhere en route, who, because of this waiver, are basically going to receive an additional, on average, 2 years worth of qualifying payment credits to their total count. And because they were already in progress and had submitted PSLF forms, the Department of Education was able to update that automatically to their accounts. All right. Now, this one is key. We sort of extracted this from the official Department of Education data. But 250,000 borrowers out there, okay, have submitted PSLF applications since this waiver was announced last October and have not received forgiveness. They've been rejected actually from the program still, solely because they did not consolidate their loans yet. So these are borrowers, these are those fell borrowers out there, okay, who could be sitting on full immediate forgiveness right now because they are now able to count the payments made right prior to their loans, prior to a consolidation when their loans were still in the fell form. However, they still need to consolidate. They still need to complete that one technicality, administrative sort of hurdle, if you will, in order to actually receive the forgiveness and take advantage of this. So I want to just make sure to point that out, because for those of you who do have those older loan types, it is about consolidating still. You still need to consolidate in order to be eligible. You are just now going to be able to get credit for those past payments, all right? But you won't if you don't consolidate. But this is sort of the most important point here at the end. So of all 46 million borrowers out there, we estimate 25% work in public service and would be eligible for public service loan forgiveness, which means millions and millions more are eligible under this waiver. And what they need to do in order to take advantage of this and to benefit is to certify their complete employment history in order to, what I say, quote, quote, get into the PSLF program before October 31st of this year. So there is one thing and one thing only that anyone across the board who wishes to take advantage of this waiver needs to do, and that is the following. They need to submit what is called the PSLF Employment Certification Form. It's known shorthand as the PSLF form. It is the one form and one form only for this program. There is no separate form for this limited waiver. There's no separate form for when you reach 120. It's the same form the entire time. It's one form and one form only, okay? Some people call it the PSLF form. Some people call it the employment certification form, but it's the same thing. It gets signed off by you, the borrower, and then it gets signed off by your employer, an official from your employer, basically attesting to their eligibility as an employer, verifying your dates of employment, or if you are employed still, your hours, and then it is officially signed off, usually by someone from the HR team, but that has access to employment records and can act on behalf of the organization. Now, that needs to be submitted to Mohela Servicing, MOHELA, okay, Mohela Servicing before October 31st, all right? If you wish to have your situation reviewed and to be able to access the benefits under this waiver. And if you have multiple, either current or previous employers, okay, you will need to submit a separate form for each of those employers. So sometimes we have borrowers who have had 7 to 8 former employers that are all qualifying. And that requires sign off from 7 to 8 different HRs and employers across the country. And I'm going to talk about here in a second, that's exactly why Savi is here and exists, to be able to provide support and facilitate that process for borrowers, because it is not easy. And I would say there are still record numbers of people submitting forms that are being rejected because of human or clerical errors. And so when we submit forms on behalf of borrowers or work with you, you are basically eliminating all of that human error. We have a 99% acceptance rate on all of our applications across the board. So again, the one thing I can sort of impart on all of you around this PSLF limited waiver is this: regardless of what you might have thought your eligibility was before, or if you applied and were rejected, or you've never submitted anything at all, don't self-select here. If you are curious or think you might be eligible or aren't sure, it is in your best interest to do the following, which is submit PSLF forms for any current or previous employment you might have had that might be eligible before October 31st. That is the only way to take advantage of this opportunity. Otherwise, if you don't, you will not be able to benefit, okay? So what keeps us up at night here at Savi is the idea that there will be borrowers out there that, because they either were unaware or misinformed or just didn't have the information at their disposal, they did not take action before October 31st and basically missed out on the opportunity to have their debt fully forgiven as a result. And so that's would just, kill me. So with that being said, we want to make sure that in the coming, weeks and months, at least before October 31st, that anyone with any degree of eligibility around this program is able to take those steps, and that we assist them in taking that action. So I'm going to take a quick pause now. I know we are over time. I appreciate so many of you for sticking around. I'm going to now transition to talk about how exactly Savi can help you with this process and sort of walk you through how to set up your account, what those features look like, etc. I know our amazing student loan experts on the Savi support team have been furiously typing away and answering your questions. So please, feel free, for those who can stick around, and walk through this with me. And then I will open it up for questions and try to answer as many as I can out loud and live after we finish through this portion of the presentation, which should be probably about, I don't know, say eight or so minutes. We can run through this pretty quickly. But I hope everything up until this point has been helpful. Appreciate, for those of you who might have to jump off, appreciate any feedback. We are trying to host more of these on a regular basis. They will always happen the first Wednesday of every month at 4 p.m. But again, we're trying to make sure that we provide all of you with opportunities to help understand and basically become aware and better informed about these. So whether that's via webinar or other digital content, like I said, we appreciate any and all feedback. Okay, with that being said, I know it's been a lot. That's been a lot of information to consume in one sitting. So this is exactly why Savi exists. We are here to help make this process easier. And we do it, just like this. Everyone can create a free Savi account and can always utilize that account at no cost, that DIY account. And basically by asking you a few simple questions, we are able to collect information to help us ultimately show you sort of the optimized repayment and forgiveness plan, almost down to the cent and what you'd be eligible for. We also are constantly monitoring for new programs and policy changes. That's basically exactly what my job at Savi entails and what I oversee. And so as soon as new information is released and becomes available, and we can understand how that's going to impact you, you will hear about it from us. And not just hear about it, but actually then be given the tools and resources at your disposal to better understand that impact and take any action you might need. And then for most of our borrowers, we offer a premium, usually paid level of service. And this basically entails Savi taking on all of the administrative, technical, and clerical burden around this process for you. So all of the paperwork and applications required for whether it's the upcoming cancellation, the PSLF limited waiver and employment certification forms, the income-driven repayment plans. We take on all of that for you, pre-fill, digitize, and basically submit on your behalf all of those documentations necessary so that they get there quickly, accurately, efficiently, free of human error, especially when it comes to this PSLF process and needing to get sign off from previous employer or HRs. I can't tell you how difficult that is for borrowers to coordinate. It almost starts to feel like a full-time job and all the sort of the back and forth and the errors that are made along the way. And so Savi coordinates that entire process for you, the borrower. In actually one sitting from your Savi account as an essential user, you can basically initiate as many as necessary employment certification forms that will then get sent out to the various HR employers and begin the process of collecting those signatures. We monitor the entire thing. Everything is collected through our DocuSign integration. And basically within the same day or within a few days, all of your forms could be submitted. Whereas trying that process on your own, printing those forms out, trying to collect signatures an hour away, driving, etc., could take days, weeks, sometimes months. And we hear all the time from borrowers struggling to do this on their own. Again, becomes like a full-time job. You all have full-time jobs. This is our full-time job. And last but not least, part of that sort of essential service is, and I think this is probably the most compelling aspect, and I get to brag about them a little bit here, is the ability to receive personalized support from our student loan experts. So these are the amazingly talented and brilliant student loan experts that have been answering your questions here in the Q&A as best as they can. And with that essential service, you are able to have access to a dedicated agent that is going to be your point of contact because this process is not simply a beginning, middle, or end. It is, I would describe it as a cadence of touch points across days, weeks, months, and ultimately years. And so for all of those touch points, I know as a borrower myself, how valuable it is to have a trusted source and point of contact throughout that process. And so we are able to provide that to you, and you're able to experience sort of the Savi service and features in a more personalized way. Ultimately helping you to cross that finish line, I think, with a higher degree of certainty, but certainly a lot less stress. So with that being said, I'm now going to sort of walk you through getting your account set up and some of these features and show you them in sort of real time. So let's talk about signing into your account. So for those of you who were new to Savi before registering for this webinar, you should have received a link in your email, basically directing you to your Savi account. You will need to reset your password, but that basically got things started for you after registering for the webinar. For those of you with an existing Savi account, you're already users, you can log back into your account at any time by heading to the link you see there. And perhaps one of my colleagues on the support team is able to put that into the chat. So everyone has easy access to link to. So again, that's app.bysavi.com/account/login. Now, once you log back into your Savi account, the first thing that you're going to see is your Savi dashboard. And this is sort of like mission control for everything Savi. It's where you're going to be able to do a lot of things. But I would say probably most importantly is our application monitoring. So if you are an essential premium user, okay, you have the ability to initiate applications across public service loan forgiveness, teacher loan forgiveness, and income-driven repayment plans, and soon to be the sort of Biden cancellation of that 10,000 or 20,000 as soon as that application becomes available. So you can see here on the left, this is someone with 3 different employment certification forms, right? All sort of active and in progress, and an income-driven repayment plan application. Each of these applications has its own sort of process and steps through monitoring. So you can see exactly where you are, what's been submitted on your behalf, what we might still need from you, sort of the expectations around wait time, things like that. There's full transparency between you and the Savi team, and ultimately full transparency around where you are in this process. One of the most frustrating things I find as a borrower is the lack of visibility or transparency you have as to what's going on with your servicer, right? How many of you have submitted a PSLF form or application and basically heard nothing but crickets for weeks, maybe months? You never heard anything at all, not even a confirmation that it was received. And so, I mean, you're only left to think, well, did it get there okay? And so it makes the whole process just so much more anxiety filled than it needs to be. So again, we basically hope to outline and illuminate every step of this process so that there is full transparency, but also so that your expectations are set accordingly. Also from your dashboard, you are able to register for any number of our live and interactive workshops, such as this here today. So we have a whole schedule of upcoming events that you are able to register for. We are including, or I should say, we are even trying to expand our workshops to include those that are sort of topic or themed. For example, like we've done in the past, workshops just on consolidation, workshops just on Parent Plus loans. So we are looking to add more content in the coming weeks. But again, you can see the full lineup of events right from your dashboard and register for any. You are also able to invite your friends and family to take advantage of Savi. If there's one thing I know as a student loan borrower is that student loan debt, I should say, tends to run in families. If you have student loan debt, you tend to know someone with student loan debt or are related to someone with student loan debt. And so our goal in trying to help solve the student debt crisis wouldn't be possible without the ability to truly spread the word and the resources that Savi has to offer to those that you know and in need. So you are able to invite your friends and family directly through that invite friends and family link. And if you invite 3 or more friends or family, simply adding their email addresses, you are actually able to receive a 50% off discount code on that premium essential service. You should receive an email with that discount code once you add those emails. So for those that are interested in that, to me would be a no-brainer. The family members or friends don't even need to click on anything. It's just adding their email addresses. That's all you have to do. They have to do nothing, and you get that discount code, which can make it well worth it for taking advantage of that essential premium service. Also from your dashboard, you can select your Savi plan. And this is where you can upgrade or downgrade at any time from the sort of free DIY to that premium essential service. Now we have users, Savi users on this webinar here today from all across our various partners and networks of borrowers. And so depending upon sort of the affiliated partner from which you are coming, whether that be your employer or your union or your membership association, the pricing around your premium essential plan might differ. And so to see exactly what is being offered through your affiliation, again, you can click select a plan and it will indicate that pricing there. Now, when you're ready to get started with the Savi process, it's fairly simple and straightforward and takes only about 10 minutes tops, I would say. And I would describe it similarly to almost like a TurboTax for your student loans. So we're going to ask you some basic questions around your family size, your tax filing status, your income, okay, and ultimately your employment. All of this to help us identify that optimal repayment and forgiveness plan for you. Now, this employment section is particularly important for any borrowers who are trying to understand their eligibility around this PSLF limited waiver. So with that being said, I encourage any of you who are interested in that to make sure to add not only your current employer, but any previous employment you might have had. So you can see here, this is someone who's added 3 previous employers. When you do click add an employer, we'll ask you some further clarifying questions to be able to refine that eligibility and get that information. Another thing I wanted to point out is the Savi guarantee. So for those that are eligible based on the information they are entering into the tool, we believe so strongly in our technology and algorithm. And if we identify that we could lower your monthly payment, we offer you the Savi accuracy guarantee. Basically, if we can't lower your payment on your federal student loans by what we say we can, we'll give you a $100 gift card. So if you are eligible based on, again, the information you've entered into the tool, you'll see this screen and you'll be able to claim and continue. The last step in the process is really syncing your student loans. So most borrowers have on average 5 to 6 different student loans with different disbursement dates, interest rates, balances. You know, it's rare for a borrower to know that off the top of their head, but more importantly, it's very sort of critical to our ability to provide you with an accurate estimate of your eligibility to have those exact data points. So we provide a loan sync. We use a technology called Plaid, which is essentially a best-in-class syncing technology used by most financial technology applications nowadays. If you have a Venmo account, you've used Plaid before. What it allows you to do is to select your servicer. So let's say Navient in this case, enter in your Navient username and password credentials, and it's going to sync over a read-only snapshot of that data. So it's not giving us access or anything like that, simply a read-only snapshot of things like your balance, interest, your loan type. We're able to confirm what type of loan you have, if it's an older loan type that requires consolidation, et cetera, right? We can flag all of those things through that loan sync. That way we can provide you with the best and most accurate estimate possible around your eligibility. Now, if you happen to be, and I'm so curious, maybe by a raise of hands, how many of you out there think that you, based on this PSLF limited waiver, are either at the 120 or perhaps even beyond it, but would potentially be eligible right now for immediate forgiveness based on what sort of you've heard today? And if so, the Savi tool, again, this is exactly why it's so valuable. We'll be able to sort of confirm that for you and communicate that to you along the way. So if based on the information you've entered in, we believe you are going to be eligible for full and immediate forgiveness, we will let you know, and you'll see a screen like this, and we'll outline what to expect and the next steps. Otherwise, for most borrowers, okay, you are going to probably be somewhere along the way towards that 120, right? Perhaps a heck of a lot closer. Or perhaps you might not even be eligible for public service loan forgiveness at all, but you are definitely going to be needing to enroll in a repayment plan come January, right? We are going to show you what that optimal repayment and, if eligible, forgiveness looks like. So for example, in this case, what that new monthly payment would be, what that total payment over time on your loan would look like, how long, if you're eligible for forgiveness, how long until that's achieved, and how much you'll ultimately have forgiven. Again, these are sort of pretty much down to the dollar here as to exactly what that eligibility looks like. Now we show you a couple different plan options, so you can expand below for more details. We want to make sure that we've, presented all the information to you, and you can click and learn to read more about what's involved with these programs. Now, everything up until this point within the Savi experience, entering in your information, syncing your loans, and seeing these plan results with sort of the best options outlined for you is all completely free and always included in that DIY account. So for those who have registered for Savi. It's generally at this point, if you have not upgraded already, but if you choose to continue and you'd like Savi to basically take on that administrative burden for you, that you'd be prompted to upgrade to Essential. And again, there's absolutely no pressure to do so. You can take this information that you see on this plan option screen here and enroll in these programs on your own. And we are fully supportive of any and all borrowers who choose to do that. But we know how difficult and cumbersome and overwhelming that can be. And so that is exactly why we provide this sort of essential service. So you can see here on the left, I mean, this is how easy it is with the click of a button, the ability to basically initiate, 3 different employment certification forms, something that might take a borrower weeks to do on their own. And this over here on the right-hand side is just a glimpse at our pre-filled digital income-driven repayment plan application. Again, we use a DocuSign integration that allows you, the borrower, to basically sign off on your phone and comes back to us for review. And then we submit to your servicer on your behalf and monitor everything each step of the way for you. And last but not least here, I just want to touch on our customer support. So if you are an Essential member and user, you are able to initiate a conversation with our support team right from your Savi account. So you can click contact support and you can send a message through this message chat here. You see right in this right-hand side of the screen to our support team, and they will be able to communicate with you accordingly. Otherwise, for those who have a DIY or a registered account, you can access our interactive help center. We've got tons of great content on there, and generally all the information you could ever possibly want around these sort of process and programs, and are happy to assist you in any other way that we can. So if you've got questions, I'm now going to try to take as many as I can. But again, that link to log back into your account or get started is app.bysavi.com/account.